All right, y'all. Today we are going to be continuing on with the trading course. This is session 4, and we're going to be talking about Fibonacci. We're going to be talking about Fibonacci retracements, Fibonacci extension levels. Really, we're going to be talking about how to find good entries in the middle of an uptrend and how to set take profit levels. And this is especially useful if we are in uncharted territory. So we're going to be focusing on how we can obtain targets. Like people get these Bitcoin targets like, 68,000, 70,000. How are people obtaining these targets? Well, one of the major ways people are obtaining these targets is by using Fibonacci numbers. So I'm going to pull up the Bitcoin chart here because we're going to be doing a lot of examples right here, and we're going to be showing a lot of different things. So right now I have the 4-hour chart pulled up with nothing on it. I have it quite zoomed out. So what are Fibonacci numbers? What is Fibonacci? Just a little background. There was a guy named Leonardo Fibonacci da Pisa in the 13th century, and he was a mathematician who discovered the Fibonacci sequence. Now, many of you are probably familiar with the Fibonacci sequence. It shows up everywhere in the creation. It's in every cell, it's in every flower, every animal somehow is related to the Fibonacci sequence of numbers. And essentially what this does is it takes 0 and adds 1 as the first two numbers, and then the succeeding numbers in the series add the previous two numbers. So basically 0 plus 1 is 1, right? And then 1 plus 2 is 3, and then 2 plus 3 is 5, and then 3 plus 5 is 8, and then 5 plus 8 is 13, then 8 plus 13 is 21, and 13 plus 21 is 34, so on and so forth. Now, when it comes to trading, and we already discussed this a little bit when we were talking about moving averages, but when it comes to trading, these Fibonacci numbers tend to provide us with very significant levels that price usually interacts with. Now, why is this the case? There's many different opinions on it, and I don't know if I can give you guys a definitive answer one way or the other. Some people say it's market psychology because everybody is trading off these Fibonacci levels. Other people say it still has to do with psychology, but it's something that's more subconscious where people are unconsciously causing price to move according to these levels. Whatever the case, these are going to be very significant levels for us, and I think it will really help you guys find good entries, find good exits to take profit. And the goal of this session is to basically lay out how to use Fibonacci. There's many different ways to use it, guys, many different ways, and people debate on which is the best way. I'll be showing you a few different ways. But really the goal is to give you guys the tools you need to put in your toolbox and then build upon what we've already learned. So we want to take the Fibonacci and add another layer onto our technical analysis skills, because what we can do with the Fibonacci is we can find confluence between the Fibonacci levels, between regular support and resistance, between trend lines, between moving averages, and of course market cipher. And this is just another tool in our toolbox to help us enter good trades, stacking those elevating factors in our favor. So real quick, just so you have some exposure to these levels before we get into it, and for your reference, there are some important Fibonacci levels. There are many levels, but some of the most important ones in Fibonacci retracements are the 0%, the 38.2%, the 50%, the 61.8%, the 78.6%, and the 100%. And then for Fibonacci extensions, some significant numbers are the 0, 100, 127%, 141%, and 161.8%. Now, basically, the difference between a retracement and an extension, which you'll see in a second, is the retracement. Well, I'll get into it. So let's talk about what is a retracement. A retracement is a short-term price correction during an overall larger trend. This can be either an uptrend or a downtrend. So if we have an uptrend, right, and then we have a short-term price correction, this is a retracement. And we know this is a retracement because the overall uptrend continues after the fact. Okay? And then again, we have a retracement. The overall uptrend continues after the fact. Now, a retracement is not a trend reversal. This is very important. Sometimes people, loosely speaking, will say, well, we were in an uptrend for a while, and even I say this, right? I say, yeah, we're in an uptrend, now we're in a downtrend. That can be true if we're on a smaller time frame, and of course a lot of this stuff is relative, but if we're looking at the 4-hour chart or a larger time frame, we can tell it's a retracement simply because this overarching structure of the market is an uptrend. We are currently in an uptrend. Nobody can dispute the fact that this is an uptrend. So anytime we see a counter trend, this would be considered a retracement. Now, when we come across retracements, it gives us a really good opportunity to long the uptrend at a good entry position, right? Because if we're just in an uptrend and we FOMO in up here, well, price comes back down. Our goal should be to enter the uptrend while price is low. This is our old buy low, sell high, mantra, to use that word. I don't know if I like that word, but I just used it, and so it's on the recording. So yeah, we want to use these retracements to find lower entries in an overall uptrend, and the opposite is true, right? And it's kind of hard to see that with Bitcoin unless we go back to 2018. And in fact, let's do that. Let's go back to 2018 real quick. I don't know how. Okay, here we go. Yeah, I don't know how quick we can make it because it's been so long and the Bitcoin price was so low and my computer is not loading. So you know what? I'm not going to go back to 2018. But if we were in a downtrend, and let's just say, for argument's sake, that this is our downtrend right here, okay, so that you guys can get a clear visual of what I'm trying to say. If this was our downtrend, then our retracement would be when price comes back up, okay, and then we continue on with our downtrend. And of course, depending on what time frame you're looking at, you will be able to use these Fibonacci levels on, smaller time frames. And on a smaller time frame, you very well could have used your Fibonacci retracement tool and considered this a downtrend, because you could have been looking on, the 15-minute, and this really would have been a downtrend on the 15-minute chart. So when we draw out our Fibonacci retracement levels, these levels will act as support and resistance levels, and they're areas of interest to enter a trade. So when we are drawing our Fibonacci retracement tool, here is what we're going to do. It is found under pitchforks on the left toolbar. So you're going to come to your left toolbar. You're going to come here to where it says pitchfork. You're going to pull down the drop down, and there's two tools I want you guys to star right now. The Fibonacci retracement tool, and then the Fibonacci trend-based fib extension tool. I want you to star both of these. And the way we're going to use this tool, if we notice that we are in an uptrend and we see that price begins to correct, okay? So we're in this uptrend from right around here, and we're coming up, 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 up. In fact, let's go back a little bit farther. We were in an uptrend for a really long time back in the fall and the winter. So we have been in an uptrend since right around here. I would say this would be the beginning of the move right here. What you're going to do is you're going to take your Fibonacci fib retracement tool, and you're going to go from the swing low of the move to the swing high of the move. You're just going to literally click your mouse at the swing low. You're going to make sure your cursor is lined up with the lowest point of this move, and you're going to take it to the highest point of this move. And sometimes it can be difficult to find the swing low and the swing high. I think it's easier if they're more defined. So like this area right here is easier to see, that our swing low of the move right here to our swing high of the move right here. Okay, you're going to basically go from the peak, the valley, like the V-shaped valley, and you're going to go up to the mountaintop, right? That's how you're going to draw your fib retracement tool. And this is giving us levels of support and resistance, and price is always going to have some kind of reaction on this on these levels. Now, it's very important when we're drawing our fib retracement that we choose to either go from candle wick to candle wick or candle body to candle body. You can go wicks to wicks, you can go bodies to bodies, but it's not recommended that you go from wicks to bodies or bodies to wicks. If you're going to choose one, you have to be consistent throughout the whole fib pull. Okay? So, in an upward trend, this is important. In an upward trend, you are always going to pull from the swing low to the swing high. So because this was an upward trend, we're pulling from the swing low to the swing high. If we are in a downward trend, we are going to be pulling from the swing high to the swing low. Okay? It's very important, otherwise we won't get accurate levels. Again, either pull from wicks to wicks or bodies to bodies. Now, you are going to look, once you pull your fib, now this is something you can't do until you see price starting to retrace. So if we're in an uptrend and then you see price starting to retrace, then you can start to pull your fib. Because if price doesn't start to retrace and we're just going up, 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 up like this, you don't know if that is going to be an accurate Fibonacci retracement pull. In fact, it's oftentimes better to wait until we get some significant dumpage going on. Like, especially if we're doing this on the 4-hour time frame, we don't want to wait until we see something like this happen, okay? And this is important. When we're doing our fib pulls, we want to see peaks and valleys. We want to see mountains. We want to see ups and downs, very clear price action up and down like that. Otherwise, it might not be the most accurate fib pull. So a good example would be what we just saw right here, where we can take our swing low to our swing high. And this is actually a great example of a fib pull, because when we pull our fib, we are going to get reactions off of these levels. And some of the most significant levels are the 0.382 level, the 0.5 level, the 0.618 level, and the 0.786 level. Now look at what happens when we go from our swing low to our swing high. Immediately, what do we notice? We notice that price had a very significant bounce off the 382 level. Okay, we literally came down and formed a perfect support on this 382 level. Isn't that pretty amazing? We formed a perfect support on this 382 level. And if we pull these fib retracement tools on various different areas, like let's go back in time a little bit to the last time we would have pulled our fib, to see what price does when it gets to these significant levels. It's actually pretty remarkable. I'm going to take it from our swing low of the move here to our swing high of the move right here. And guys, again, look at what happens here. This is really amazing. Just take a look and look what happens when price gets to one of these levels, right? The first level we come down to is the 0.382 level, and we get a bounce right off of that, right? Then we come down again and we get a bounce off, and let me zoom out so we can see what levels they are. We get another bounce off the next level, off the 0.5 level. Then we come back up from that, and then we get another bounce off the 0.5 level, and then our retracement is over, and we can now move on. And so if price is in an uptrend, and you're looking to enter at a low, a great thing to do is to pull your fib and look to see what happens once price gets to one of these levels. And when price gets to one of these levels, you are supposed to get interested in trading, and this is where we look at our other indicators. We're going to look at our moving averages. We are going to look at market cipher. We are going to look at support and resistance levels that we drew freehand using our eyes. Now, let's just put on some indicators here. Let's put on market cipher A, right? And we're going to use the EMA that we like to use. So let me pull that up for us and put on ribbon 5, turn off ribbon 3. And look at this, guys. I mean, this is really cool, right? This is really cool. But we can already start to see some confluence just because we know, just by looking at the EMA ribbon on market cipher A, when we come up to this 382 level, after getting a nice bounce off the 0.5 level, immediately market cipher A, the EMA turns white, confirming that the downtrend is over. So we have two areas of confluence right here, and we didn't even do much work. But we can see that we got to the significant Fibonacci level, and our EMA has now turned white. We have confirmed above the EMA for the first time since this big dump happened. This is the first time we're confirming above the EMA. Just so happens to be at the same time we get to a very significant Fibonacci level. So when we're pulling these Fibonacci's, we are going to be looking at these levels, and when we get there, we're going to be looking for confluence. Let's pull another one. Let's pull another one from this swing low right here to this swing high right here. And what do we notice? Again, right away, we notice that we get a nice bounce first off the 382 level, then we get another bounce off the 0.5 level, then we get another bounce off the 0.382 level, and again, as soon as we get that second bounce off the 382 level, we confirm above our moving average, and we know, okay, our retracement is over. It's about time that we get back on with the uptrend. So I hope this makes sense to people, and obviously I'm going to be taking questions after this is over. Now, if anybody wants to know, because there's a lot of different ways to set up these Fibonacci tools, and I'm sure you've seen other YouTubers use this, and they have different colors and different lines and different stuff. There's a lot of different options. This is the way I like to use it, which is pretty stock, okay? This is pretty much the way it will come stock in TradingView. I add a few other levels to mine. Keep in mind, guys, what I'm showing you right now is the way I use Fibonacci. There are many, many different ways to use it, so just keep that in mind. This is meant to be more of an introduction to Fibonacci so you understand what it is, you have a basic idea of how to use it, and then as you're out there and you see other people using it in different ways, you'll start to connect some dots and be like, aha, I see what they're doing there, and then you can kind of take what they've done and just keep building upon it, right? That's what we're all doing as traders. We're building upon the knowledge that we already have, and we're constantly growing. So these are the levels I have if you want to screenshot that. Okay, so again, let's do some examples of fib pulls. I almost said pib pulls. Let's do some examples of pib pulls. Okay, we're going to look at a few. We're going to look at the areas of interest. We're going to notice what price does. Let's go to some random assets that aren't just Bitcoin. Okay, I love Bitcoin, but let's go to something else. Let's go to Litecoin. Let's go to Litecoin, USDT, right? And let's just see what price does on Litecoin. Let's take our Fibonacci retracement tool, and we are going to take it from the swing low, I would consider this the swing low, to the swing high. And let's just take a look at what price does here. When we get to some of these levels, you can see that we have quite a nice reaction. When we get to the 618 level, okay, it's not 100% perfect, but there's actually something that I'm not talking about here, which I probably should, which is when you get to the 618 level, there's a little area between the 618 and a little bit below called the golden ratio, okay? You guys have probably seen people talk about this a lot, and this is not exact, but basically, oftentimes if we're in an uptrend or a downtrend and we're getting a retracement, it will retrace directly into this little pocket right in between the 618 and a little bit below there. So you should always be keeping your eyes out for this kind of area in the middle of a retracement, because most of the time, I shouldn't say most of the time, I should say many, many times, we're going to come down to this golden ratio right below the 618 level, and we're going to get a significant either bounce or, if we're in a downtrend, we'll get a little rejection off of that 618 level. And so just look at what happens at these levels. We get this significant bounce right here, right? And where do we bounce up to? We bounce up perfectly to the 0.382. Then we come back down perfectly to the 0.618. Then we come up and we consolidate on the 0.382, right? And then, I don't know what this is. So this is why you can't just use Fibonacci alone. We need to use confluence with moving averages. We need to use confluence with market cipher B. It's very important, and other support and resistance lines and stuff like that. Let me turn off market cipher A. Let's go to another asset and just do one more example of this. Let's go to, let's go to a Forex pair just because, okay? Let's go to a Forex pair. And this time, let's do this downtrend that we're in. We'll take it from the swing high down to the swing low. And, what do you know? We have some interesting things happening here, right? As soon as we come down to the 0.32, we get a bounce. We're bouncing between the 0.5, coming down. But this is all in hindsight, so we wouldn't know that. But right away, the first thing we see is we come up and we get a rejection off the 0.382 right here, which is very common, by the way, in a downtrend that we will come up and reject off the 0.382. So, we've got our swing high to our swing low right now, and we get a rejection off the 0.382. But something else to look at, let's say we were just measuring from here to here instead of from here to down here, we could still pull our fib right down here. And look at that. We get a rejection off the 0.382. And then we come down and we get another rejection off the 0.236. Now, I'm sure you can see right away that there are many times where you could pull your fib. It's not like a one-size-fits-all, right? Because we can pull it from here down to here, or we could pull it from all the way up here, all the way down to here. There's a lot of different ways we can do it. But usually, especially if we see such big points, right, where price clearly pivots, we can use the fib and use it to accurately time the bottom or a bounce off of a move, okay? So now what I want to talk about is how we can use this to obtain targets, okay? Because fib levels can be used to time the bottom of a retracement in an uptrend or a downtrend. However, we can also use Fibonacci to obtain take profit levels as well as price targets. Okay, so let's go back to Bitcoin for a second right here. And I'm going to delete this red circle. What I want to do is I want to pull our fib, and there's a lot of different ways that people obtain targets, okay? Some people will use the fib-based extension, which I will get into. Other people just use the Fibonacci retracement tool and they will reverse it. And still other people will take the Fibonacci retracement tool and they'll do one from the bottom to the top and then one from the top to the bottom. Let me show you what I mean. So let's take our Fibonacci retracement tool, and I'm going to pull this thing from the swing low of the move to the swing high of the move, right? Okay. And you can see that we're getting a nice bounce off the 0.5 level right here, okay? As we're getting a bounce off this 0.5 level, what we can do is we can take another Fibonacci retracement tool and we can go from the swing high to the point where we got a bounce and the retracement ended, okay? And what this will do is this will give us some target levels that we can look to take profit at, okay? We're basically projecting into the future how price is going to continue after this retracement. Now check this out. I'm going to delete the first fib. We got to bounce off the 0.5 on the first fib. Now the second fib, which I pulled from the top of the move down to the bottom of the retracement. Now we can look at these levels as potential take profit levels, okay? Take a look at what happened to the price once we bounced off that original 0.5 level on the first fib pull. Look at how, and this is pretty remarkable. Look at how we pretty much perfectly hit all of these levels. Now, ignore Elon Musk's tweet for a second. Let's just zoom in here and look at what happened, okay? We bounced off our 0.5 level from that initial fib pull, and the first place that we come to and find a resistance at, right? Our first take profit level would have been the 0.382 of our second fib. So right here, we come and this is a resistance, and we are at this resistance for quite some time. So we could have, entered long when we noticed that we were bouncing off the 0.5 level, and that would have been a nice move for us. That actually would have been a nice 16% move, right? A nice 16% move. Very nice. Very nice. Extremely nice. And then we come up again to the point to the 0.5 level, and look at this. The 0.5 level, it acts as a resistance right here, and then a support right here. And then we get to our next level, the 0.618. Again, we form some kind of consolidation here. And then you can clearly see at pretty much all of these levels, right? At all of these levels, we come up and we touch. And look at this. Look at how perfect it is. It's even so perfect where, because the take profit levels have smaller intervals down low, and they become wider and wider as we move up, I mean, look at how price perfectly just went from this 1.618 extension all the way up to the 2.272 extension. The reason it's called an extension is because we're projecting price forward. We're saying, okay, we know that this was our uptrend and this was only a retracement. We know we're still in an uptrend, so now we're extending from that retracement to see what are our next take profit levels. And look, we almost perfectly hit, guys, this 2.618 extension, okay? And these can be very significant levels for setting take profit, okay? And obviously I'm doing this on a very large scale, but let's zoom in a little bit. Let's go to the 1 hour, okay? And let's just go back in time a little bit and see, no, let's even go lower than that. Let's go to like the 20-minute. Let's see if we can see anything, some significant price action, and see if we can actually use these fib levels just on smaller time frames. Let's just see if they're still accurate. Now, I've never actually done this before. I have not tested this beforehand to see if this will be accurate, but let's just see what happens. So I see we have an uptrend and then a retracement and then continue on with the uptrend. So let's pull from the bottom to the top of our uptrend right here. And what do you guys know? What do you know? We get a bounce, perfect bounce off the 0.382 level. Okay, now again, how do we know we're going to bounce here? We're going to get into that later in the session, but the reason we know that we were going to bounce there is because we were looking for confluence between moving averages, right? We were looking for confluence between market cipher B, other support and resistance lines that we have drawn on the chart, possibly maybe even trend lines where we're trading within a channel. This is just another elevating factor when we come down to a Fibonacci level. Now let's take our Fibonacci again and let's go from the top to the bottom of the retracement. Okay, and look at this, guys. Look at this. Look at how we even on these lower time frames, we could have easily used this to set our take profit levels, right? We could have easily used this to set our take profit level. Now my first take profit level, when I'm doing this, when I'm using the Fibonacci like this, and when I'm drawing it from the bottom to the top of a move, and then I'm taking it from the top of that move to the bottom of the retracement, my first take profit level is always going to be in between 0.382 and 0.5. In fact, I'm pretty confident that if you just look for moves like this on the chart and you draw your fib from the swing low to the swing high, and then you draw another fib from the swing high of the move to the bottom of the retracement where we get the initial bounce, you will find that I would say at least 80% of the time that price will bounce up and go at least between the 0.382 and 0.5 level. These are great areas to set your take profit if you're looking for a little scalp trade. It's very safe to do it that way because most of the time price is going to come back to those levels. But now look, we came from the top of our move, we got the bounce off the 0.382 of our initial fib pull, and we hit each one of these levels right here. And again, look at how we find consolidation at all of these levels, but the higher we get, the less consolidation we get, and we just come up and we hit these higher targets. This is one way to obtain targets using Fibonacci. So just to reiterate that, because I know it can be a little bit confusing, okay? What we are doing is we are looking for a move that has a clear swing low and a clear swing high. So just to use the recent Bitcoin move as an example, we have a clear swing low down here, okay, because we're looking for price to come and form a nice bottom, right? That bottom is our swing low. We're going to take our Fibonacci, we're going to click at the exact swing low, and we're going to drag it to the exact swing high, okay? And once we see price, we're going to do this, right, if we're in an uptrend and we see price starting to take a dump. That's when we say, okay, let's pull out our fib. Let's look at what key levels there are so that I can prepare and be prepared ahead of time for when price does come down here. What am I going to do? I need to have a plan. When price comes down here, what am I going to do? I need to have a plan. If price comes down here, what am I going to do? I need to have a plan. So you pulled that first fib from the swing low to the swing high. And then once you realize that we're getting a bounce off of a certain level, okay, Let's say you notice, okay, we're getting a bounce off the 0.5 level. Now what you're going to do is you're going to take your fib again. You're going to go from the swing high of the move to the point where we got that bounce, and these are going to be your take profit levels here, okay? These are going to be your take profit levels. You can now delete your first fib. Whoa, Fib City up in here. Delete your first fib, and now you can use these as your take profit levels. And look, again, we come up right between, I would always start taking profit right in between these two levels, the 0.5 and the 0.382. Like, they're just safe levels. They're safe levels. And then if we get past here, you know, once we get past the 0.5, oftentimes we might see another little retracement inside of retracement. That's the thing. Like, there's retracements inside of retracements. You can technically pull your fib. I mean, it becomes less and less accurate the smaller you go. But you could technically pull this thing in between all of these little divots. But trust me, it gets less and less accurate the more you go. I like to use this on the larger time frames to kind of time bottoms of things, right? And now these are just our take profit levels on this second fib that we pulled from the top to the bottom of the retracement. And, you know, look at this. We almost came up and perfectly hit this target right up here before we had last night. Last night, guys. But even after last night, it is very interesting. Is it not interesting, guys, that we are bouncing off, forming perfect support off of these Fibonacci levels, right? From the high to the low of that retracement, we're coming back down and forming support on the 0.786. And if we were to pull the fib from the bottom of this swing low that we had on February 28th to the top before last night, we formed a perfect support right here on the 382 level. A perfect bounce off of this level. So this could be a good time, guys, if we have confluence, okay? Let's say this is actually a bounce that's happening. Because we have confluence with Market Cipher and other indicators, we're going to get into how to determine if we have confluence later in this session. But let's say this is our bounce. If this is our bounce, now what I would do is I would take my fib from the swing high to the bottom of the retracement, and this is giving us now take profit levels that we can shoot for moving forward, right? Let's say this bounce is real. Where would our next take profit level be? Well, we would have one at 66. We'd have one right around 72K. The 71 level, another one right here at 73K. Then we have another one here around 80K. Then the final one we'd have up here would be right around 85K. And believe it or not, guys, the $85,000 level is the level that I'm actually shooting for on this run up. And it's amazing how Fibonacci it just gives you more confidence in things that you're already thinking. Because, like, you know, we come down from the swing low, the swing high to the swing low. It gives us this high $85,000 Bitcoin level. My fib is not right here. Hang on. Oop. It gives us that level of, there we go, right around 85K, right? Now, interestingly enough, and this is why you should always just be pulling fibs and stuff and drawing lines and just looking at the charts, analyzing things, because remember how in a lot of my live streams I was talking about how, you know, it looks like, guys, we have like a giant bull flag where, you know, we have a flag pole right here, and then we have an area of consolidation, which is, you know, right here, and then we had a perfect, you know, move to the upside where we had a perfect little bull flag, right? We had, and we'll get more into bull flags tomorrow, where we're talking about tradable patterns. But a bull flag is where you have a flagpole, and then you have the flag, and then you have the same length of the flagpole to repeat the move, right? And then what we had here was we had an area of consolidation right here, like a triangle shape. And once we break out of this shape, our next target, if we just take this same flagpole and move it up, is right around this same $85,000 level. So as you're drawing on the charts and you're looking at patterns, you're looking at shapes, you're looking at price action, you know, the more things you can find that will stack up in your favor of a specific price target, the better. So let's see here. There's other ways, guys, of obtaining targets with Fibonacci. What I just showed you is one way that many traders use. In fact, I took a trading course a while ago, and they did the Fibonacci where they pulled it from the bottom to the top, and then they pulled it from the top to the bottom, okay, to obtain targets that way. There's another way to do this. There's a few ways to do this. One way that some people do is simply just reversing the Fibonacci pull, okay? And the way you're going to do that is you're going to go into the settings of your Fibonacci, and you're going to just click reverse. Boom, okay? Now, when you click reverse, it will just flip the Fibonacci upside down, and this will give you some take profit target levels, right? So we went from the top, from the swing low, right? We went from the swing low right here to the swing high of our move, just so you guys can follow, right? We pulled our fib from here. Our fib is only measuring from this point right here to this point right here. We clicked reverse, and so now instead of looking at potential levels where the price will retrace to, right? Because if we keep it on standard fib, right, it's showing us levels where the price will retrace to, like it's going to trace down to the 0.5. But if we reverse it now, it's showing us levels where price could potentially go up to if we're just continuing this uptrend, right? Ignoring all like retracements and stuff like that. And look at how we came up and pretty much perfectly hit this level, the 1.618 level right here. And not only that, the 1.272 level, we hit that perfectly as well. And now we're just waiting right up here and right up here to hit those levels, right? Now there's one more way to do this, and that is to use the trend-based fib extension. The trend-based fib extension is basically a Fibonacci tool where instead of connecting 2 points together, like we do with our regular fib retracement tool where we're connecting 2 points together, we're actually going to be connecting 3 points together. And you can have a lot of fun with this. Guys, Fibonacci, we could really get into this and talk about this for a very long time, but I just want to give you guys the most basic uses because I know that you guys will, take this seriously, and as you go on your trading journey, you are going to encounter many ways to use this. But the trend-based fib extension, you're going to come to Fitch Porks, right? Fitch Porks. You're going to come down to trend-based fib extension. Make sure to start. And basically what you're going to do is you're going to go from the swing low of a move to the swing high of a move. And then once you get your bounce, okay, off a significant Fibonacci level, you are going to then take it back down to the low of the retracement. And this will also give you targets to take profit as well. They're a little bit different than just flipping the Fibonacci upside down or doing two, one from the bottom to the top, one from the top to the bottom. But just so you're aware, if you ever hear somebody talking about a fib trend-based extension, this is what they're talking about, where they're taking from the swing low of a move to the swing high and then down to the bottom of the retracement, and this is giving them their take profit. And the most popular take profit, if you're doing a trend-based fib extension, is 100% of the move. So what I mean by that is, let's get our trend-based fib extension out, okay? And we're going to go from our swing low to our swing high, and we come back down to the bottom of that retracement, and 100% of the move is right here where it says 1. Right, because these are all percentages, right? The 23.6%, the 38.2%, the 50%, the 61.8%, the 78.6%, the 100%. Most people will set their take profits level, looking to get a 100% of the retracement move that happened here. Okay, so this is just another tool in your toolbox that you can use to set take profit levels, and we can use this, on multiple different time frames. We can use this on various scales. I prefer to use Fibonacci levels, guys, on the large time frames, right? The 4-hour, especially the daily as well. Okay, the daily as well. If we go from our swing low to our swing high, come down here. It's the same thing, just on a different time frame. But you can see that these levels are significant, right? You can see where we're coming here, we're creating a support, we're creating resistance. Right now, we bounce perfectly off this line right here. My favorite way to use Fibonacci, guys, is not to use the trend-based fib extension. I like to use a fib retracement from a swing low of a move to a swing high of the move. And then I like to take a second one, and I like to go from the swing high to the exact place where we bounced off and got a nice end of our retracement there. Now I like to use these as my take profit levels. I find, especially for trading Bitcoin, that these tend to be just more accurate for me, right? Because I mean, we tend to hit these more to the dollar when I'm trading Bitcoin. And really, guys, I don't use fibs too often if I'm trading things other than Bitcoin and Ethereum. I used to use fibs a lot when I was into Forex trading, when I was into stock trading. But now when I'm trading altcoins, I usually don't use the fib. I usually use the fib on Bitcoin and Ethereum on larger time frames. So the last thing I want to talk about, guys, is using Confluence, okay? It is extremely, extremely important that we don't just trade these fib levels. Although you could make a really good case and say, if we take our swing low to our swing high, and you could make a really good case, like just go back and back test this, you will find that when we, take a swing low of a move to a swing high of a move, and actually this is not the right swing low, hang on, I'm sorry, the swing low was lower. We go from the swing low to the swing high, right? And we notice that we're getting a bounce off of one of these levels. I always look for bounces off the 382, the 0.5, and the 618, okay? Sometimes if we have a really deep retracement, we'll come down to the 0.76. I find that if I pull that first fib and then I pull the second fib from the swing high of the move to the exact point where we got the retracement, that you will pretty much always be able to take profit somewhere in between the 0.5 and the 0.382. And then these would just be your take profit levels that you would go to the whole time. And it's so cool to see all the confluence, how these just form natural support and resistance lines. Now, let me go back to my chart that I've got going on here, right? I've got a chart. Well, let's do some top-down analysis, guys. Let's just do some top-down analysis. So let's say we open up the chart and we want to pull a fib. How would we set up the market structure so that we could use the fib in a way that would actually benefit us? What we're going to do is we're going to do top-down analysis. So again, we're going to start on the weekly time frame, and we're just going to draw levels of support and resistance. And you guys already know this because you've gone through this before. So I'm just going to be drawing weekly levels right here of support and resistance. Weekly levels. Let's put one right up here as well. One right here too, right? Yeah, I'll move it up here. Okay, and of course we will give these a W for week. Is for week. It's not for Wednesday, guys. These are not the Wednesday support and resistance levels. These are definitely the weekly. Although Wednesday is part of the week, we definitely want to make sure that we know these are weekly. Then we go to the daily. And we are going to draw, more key levels on the daily, right? Let's see here. I mean, really, there's a lot of overlap here on these daily levels. I would actually put a daily level right here, of course, at the 30,000 level, and I would delete this weekly just because this daily, when there's two next to each other, a lot of times I will just delete them and have one because it's a zone more so than it is a line. And where else do we have some daily levels? We're always going to go to the left, and we have a daily level, nice one right around here, right around the 48,000 level, and then again we have one right around here, and then we have another one right around here, a little bit. Okay, these orange ones are our daily levels. And yeah, let's just do weekly and daily for now. Okay, and then let's go to the 4-hour chart. I mean, yeah, let's do some 4-hour ones too, guys. Let's just do some 4 hours. We have one, I would say, right here. Make this blue. Again, I'm mostly just putting these levels on for example purposes. How are we going to find confluence? So we're going to draw our support and resistance levels. We have our yellows are weekly, our orange are daily, our blue are 4 hours. Then I'm going to pull up market cipher A. Okay. Let's pull up our market cipher A. Let's turn off these icons for now, just so that we can see. Let's turn off these icons just for now, so that we're just using the moving average of market cipher A. I'm not saying you can't use the icons. I just want to take it one thing at a time. Okay, and then what we want to do is we want to pull up market cipher B. Right? Where's market cipher B? Here it is. Market cipher B. Then we want to see, are there any trend lines we can draw here? Like, can we draw any trend lines? Do we see any kind of patterns? Well, we would have to zoom out maybe to see if we're trading in on any kind of trend line here. Perhaps we could even draw a trend line like this. Perhaps, right? We could just, trend lines don't have to be perfect. They're just giving us, generally what has happened to price in the past and where it tends to come back to, giving us diagonal levels. And I could totally see that, yeah, we could consider this trend line. It had 1 touch, 2, 3, 4 touches. I'm just adding as much as I can to the chart to see if there's any kind of confluence that I can find. And now what we're going to do is we're going to pull our fib. We're going to pull our fib, and we're going to see if we have confluence to know when we can expect a reaction off of one of those levels. So I'm going to pull my fib here from our swing low to our swing high of the move. And guys, this can get sloppy, so you have to really, pay attention to what you are doing here. And actually, before I pull my fib, I do notice after pulling the fib that we do have a really nice 4-hour support right here, right? We have a nice 4-hour support right here because it was support, support, support 3 times in a row. So now if I pull my fib from the swing low to the swing high, I can see some fangs, all right? What I first noticed right away is that we're getting a bounce off of the 0.5 level, and not only are we getting a bounce off the 0.5 level, but we're getting a bounce also off of a 4-hour support, and we're getting a bounce also off of a trend line. And not only that, but as soon as we bounce off of this, all these things here, right? Our Fibonacci 0.5 level, our 4-hour support, our trend line, we're also printing a green bottom on market cipher B, right? So if we're in the middle of a retracement and we're trying to figure out which one of these levels is going to be the bottom, it would be very helpful if we notice, hey, look, market cipher B is telling us we're coming to a bottom. Money flow is in the red, right? Money flow was in the green right here. So you notice we did get a bounce off the 382 level. Market cipher was telling us we hit a bottom. Once money flow crosses into the red, this is a much more sure signal that we have come to the bottom. When market cipher B on the 4-hour is in the red and we print one of these big dots. And so this is telling us, look guys, we're at a bottom. Our bottom finds confluence with a 4-hour support level. Our bottom finds confluence with the 0.5 Fibonacci level. Our bottom finds confluence with this trend line. And then a few candlesticks later, we get even more confluence, right? Let's say we start our position here. Then we get even more confluence that the trend is heading back up because our EMA turns white and we confirm over the EMA. And so we have all these things, as you can see right here. We print the bottom, we get the bounce off everything, and then a few candlesticks later, we turn white on the EMA after we confirm above it. And so we see all these things in our favor, which would be telling us, okay, now is a good time to enter because we know the retracement's over. We've confirmed that we're heading out of the retracement and continuing with the uptrend. We have many confirmations. We have market cipher B. We have the Fibonacci level, 0.5 bounce. We have the support, 4-hour support bounce. We have the trend line bounce. We have the exponential moving average confirming bullish. And if we had waited for all those confirmations, we would have entered right on this candle here, and we could have ridden this all the way up to the all-time high of a nice 24% move, and we would have done that by using our Fibonacci retracement tool in conjunction with all these other tools that we have. And of course, you don't have to wait for all these confirmations, right? Because if we're trading the 4-hour 24 strategy that I often talk about, we would have seen a green anchor wave forming down here on market cipher B, we would have looked also on the 24-minute to find an entry on the 24-minute and combine that with the bounce off the support, the bounce off the Fibonacci level, the bounce off the trend line, and we could have used all that to enter into a swing long position here and just ride it up, and we could have used this trend line as our stop loss, but our take profit levels would have been, right, we would have entered using our Fibonacci and these various other confluences, and then we would have set our take profit levels by pulling another Fibonacci from the top here to the bottom of that retracement. And of course now we would want to delete our first Fibonacci. Whoops. And now these would be our take profit levels. And just look at how the take profit levels, well, obviously, you know, we had our existing support and resistance levels down back here. That would have been our, so yeah, so when you're using Fibonacci, you know, on the way up, obviously, after a retracement, you're going to use your previous support and resistance levels for take profit. But once you run out of those levels, right, once we get past this all-time high, we don't know what our next target is. But we can know if we use Fibonacci, because this Fibonacci is giving us other take profit levels that we can look to and say, okay, so maybe we'll go to 67.7 after we, you know, surpass our current all-time high, and then maybe we'll go to 77,000, and then we'll go to 82, and then, you know, finally we'll come up to these super high levels all the way up here at $100,000, which, you know, we all think we're going to go to. So this is going to help us set take profit levels when we're in no man's land, when we're in uncharted territory, price discovery mode as they call it, because a lot of times these Fibonacci levels will be respected. Okay, they will be respected. Not always. That's why we find confluence. So that is how we are going to find confluence and use Fibonacci to find entries, to set take profit levels. And really, guys, as you can tell, as we're going through the course, my goal is to give you guys tools in the toolbox, and we're building a building, the trading building, right? The first level is just looking at price action, looking at candlestick patterns, looking at trends. The second level of that building is support and resistance, trend lines. And then we hit moving averages. And now we're coming up to Fibonacci. So now we can take all these things that we've learned and use them in conjunction with Market Cipher. And it's pretty amazing, guys, how, you know, it takes away so much of the uncertainty. Using Market Cipher takes away so much of the uncertainty because we can just wait. We can just wait these retracements out, wait until we form a nice bottom here. And even if we wanted to enter right here at this bottom before money flow turned into the red, we still would have had a really nice entry and a really nice take profit level based on Fibonacci, right? We would have found a bottom here. It was the 0.5 of the Fibonacci. I'm sorry, this was the 0.382 of the Fibonacci. It was also a weekly support. And Market Cipher is telling us we came to a bottom. And, you know, we could have used all that confluence to take this little move up, which, you know, we could have taken even though we're under our moving average here. Even though we're under this moving average, we could have just come in here. Our take profit level would have been either the moving average or this next daily resistance level. Then again down here, we use our Fibonacci. We get our bounce off the 0.5 level. And we come up. Our moving average confirms bullish. We just keep hitting our take profit levels, guys. It's pretty nice. It's pretty nice the way it works. And of course, there's so many things we can look at with Market Cipher. Like, for example, if you don't want to trade in these choppy areas right here, right? These are choppy areas. Let's say you're a hardcore swing trader. You don't even want to bother with this. Well, just wait until the money flow index turns green on Market Cipher B, and then you can just use all your other confluences that you found with your Fibonacci to take this move, which was a really nice smooth move. It was a smooth move, right? It was like not a full-on laxative, but it was definitely a softener, right? It was definitely a fiber tablet move right up here. All right, guys, so that is it for now. Let me clear off some stuff on this chart. And let me just show you guys, you know, what are some things to be looking for, especially after we had our late night bad experience, right? We had a bad experience last night. I had a bad experience last night. I'm drawing my Fibonacci, And I'm noticing, guys, noticing that we're getting a nice bounce off this 382 level. Something I'm not noticing, though, guys, is that market cipher B is not really telling us that we're hitting a bottom yet, okay? So if I notice that we're starting to form a bottom on market cipher B, perhaps I would start looking for a long, but just to be honest with you guys, it's not giving me as sure of a signal as I'd want to. Let's take a look at what happened before, right? Back in the last time we had a nice correction like this, where we come from our swing low to our swing high, right? We got a bounce off the 0.5 level. Sorry, guys. Yeah, we got a bounce off the 0.5 level simultaneously while we were printing a green dot, okay? Simultaneously. So we would want to wait for something like this, right? Where we had a few candlesticks of indecision right here where we formed a nice support. It wasn't until we got this wave right here on market cipher B where we would start looking for long. So right now, it looks like we're forming a very nice support here, okay? It's been 12 hours where we have found support on this daily level right here. This is an orange daily level. So now if we start to print a bottom on market cipher B and we're still finding support and or bouncing off this level, which we know is a Fibonacci 0.382 level, great time to start looking for a long. And how do we set our take profits? Well, let's just say for example's sake that this actually is a bottom and we actually are getting a bounce off of this and is confirmed with market cipher and all that, right? What we would do is we would take our Fibonacci from the swing high down to the bounce itself, and these would be our take profit levels. Of course, our first take profit would be the all-time high. Then we would set it at 64K. This would be the next level. I'm pretty sure this was the level that we were looking for. If any of us happened to be in a trade last night, I will not name any names as to who might have been in a long last night without any confirmations, but some people were, right? And then these would be our take profit levels. So this is Fibonacci overview. I hope you guys found this helpful. I'm going to go into the Discord and I'm going to open up the flow for some questions. Let's see here. Oh no. Was there an issue? I might have to actually redo this whole video. That would be perfect for the day. Okay, guys. Sorry, guys. I'm gonna have to redo this stream. I don't know what's up with my internet today. Guys, I'm gonna have to redo this stream. Dang. All right. Let's see. I have 22 viewers. Sorry, guys. I am really sorry. I'm going to have to redo this right now. Because I have such bad internet today, what I will do is I will record a video and upload it. It became better as I went, says Ytrob. Guys, like, is it okay right now? Like, if it's okay right now, I can go back and do it again, which would probably be good because I feel like half of the people didn't even know that we had a time change today. So, it's not my computer, it's my internet. I'm pretty sure. Because I know I have poor internet today. I restarted my computer right before I came on here. Yeah. Okay. CPU overloaded. All right, guys. Here's what I'm going to do. I am going to restart my computer. I'm going to do a quick little Mac booster on here. Clean out all the crap I have on here, okay? I'm going to come back in here and we're going to redo this stream. Okay? we're gonna redo this stream. So give me 1 second, guys, because I want to make sure that, okay, it's good now. Dang, it's good now. Yeah, okay. Ed, I feel you about the animals. Okay, Ed, and okay, so here's what I'm gonna do, guys. For those of you who are here for this stream, I will do another stream, and hopefully my computer will not be overloaded. And so for those of you who can stay for the second stream, stay for the second stream. In the meantime, if you guys have any questions regarding this, and you can't make the second stream, like ask me right now. I'll answer some questions quick before I redo the stream. So what defines this? These are some good questions here. Let's talk about these questions. What defines a move? How far back do you go? Says Water Skier. The way you define a move is you will go from the swing low to the swing high. Okay, so a swing low is a place on the chart where you can clearly see a V shape, right? Price comes to a point. That is always going to be the beginning of your fib pull, is where price comes to a point. You are going to look for those points. Sometimes they can be harder to find than others. And then you're just going to pull that bottom point to the top point. Or if you're in a downtrend, you're going to pull the top point to the bottom point. Let's see if we have any other videos here. No, I'm currently not using a VPN, Crazy Bean. Copcon wants to know, my question is, what about the trend-based fib extension tool? It has 3 points to draw. I'm confused where to put them. Okay, great question, Copcon. Let me quickly go over the fib-based extension tool again. You're basically going to look at it the same way that you would look at the regular Fibonacci retracement tool, where you're going to start right here at the swing low, and you're going to drag, there's a dotted line, I don't know if you guys can see it, but you're going to drag that dotted line up to the swing high, and then you're going to take it and drag it down to the bottom of that retracement, right? So if you're tracking a retracement, it's basically the same as taking your second fib retracement tool from the top to the bottom of the retracement, except this, you're doing it all in one move. This is, you're doing it all in one move, and you can see I'm lining up the bottom of this fib extension with the bottom of the retracement. So I'm taking my mouse and I'm taking it from the swing low, I'm dragging it up here, I'm clicking at the swing high, and then I'm dragging it down here and clicking when my cursor gets right to the bottom of the swing low. That's how the trend-based extension works. Let's see. Really, Eastern time was good the whole time? Okay, guys, I'll just record a new video and upload it. I'll record a new video and upload it. Is that okay with all you guys? Like, I want to make sure, because you guys paid for this, I want to make sure that you guys don't feel like you're getting gypped off. So, you know, let me know. Let me know what you think. And I'll be right back, guys. Type what you think in the chat. I'll be right back, and then we'll make a decision. All right, y'all. Okay, here's what I'll do. I'll just record a video. Yeah, I'll record a video and upload it later. If you guys have questions about the uploaded recorded video, just message me on Discord. And actually, if you have questions, message me. And if we have to, we can even do a Discord call if you guys need more clarification. That way we can like talk one-on-one if you guys need to. All right. Thank you guys. Appreciate you being here. God bless all of you. And I'll see you guys tomorrow. See you guys tomorrow.